Hello friends, Roman is here. Greetings from Iceland. That's where I live actually. I have been living in Iceland for the past 16 years, though I was born in Western Ukraine. So now you know a little bit more about me. And I'm about 46 years old. I've been trading forex for already 7 years. 7 years forex. Well, with the breaks, I've been studying, trading, not trading, but altogether I stumbled upon forex some 7 years ago. So it's already some time. I have got some experience in this field, I would say, which I would like to share. I believe it came time now for me to share my knowledge with the beginners or people who wish to learn, because I know it's very painful experience to trade forex if you are a beginner, and hopefully my stuff, my experience will help you to improve yourself, to be more confident when it comes to trading. So let's start again. Today I will introduce you to one very powerful tool called Nison Candle Highlighter. I am sure you never heard of it, but perhaps you heard about Steve Nison, the father of candle charts, the man who introduced the candle charts to the West before the one we have now on the screen. The candle charts, the candles. Because before people used bar charts, it was Steve Nison that he took this knowledge, this candle charts from Japan. It's a Japanese way of looking and studying the charts, candles, and he introduced them to the West, and now all people around the world use exclusively, nearly everybody, candle charts. And the same Steve Nison, he is well doing and living today, he sells this indicator with his favorite candle patterns that you can have it right on your MT4. This indicator is called the Nison Candle Highlighter. I have been using this indicator in the past, not so much now, but it's pretty good tool, though it's quite expensive one. It costs $500. It costed a long time ago, some years ago, $500. I don't know how much it costs now. So I have had it for a long time, this indicator, and just want to show you the review. How can you use candle patterns, candle formations in your trading, along with Camarilla pivot points? My favorite way of looking at charts, one of my favorite ways, Camarilla pivot points is, I use Camarilla pivot points as a road map. When you get to the city, you need to have some map before you start walking, or some Google Maps or some paper map, to know, to orient yourself, to have some ideas where is what street, where to turn, some roads, otherwise you will be lost. So Camarilla pivot points are sort of a map that you use with the charts, which gives you the idea. It's scenario-based trading, where the road tends, which tend to take, where to walk, or where the road ends, that you don't stumble, So altogether, it's just comparison. So we are using Camarillas, and here I plotted on 4-hour chart Camarilla pivot points and Nison Candle Highlighter. I switched off many candle patterns. I just put the most useful ones, and we can see how candle patterns can help us at certain levels. Steve Nison likes to use them with Bollinger Bands, but I like to use them with moving averages, or with pivot points, like Camarilla pivot points especially. So, of course, you can use sentiment data along with it, but let's start here from the month of September in 2021. So here you see we started at the monthly pivot, Camarilla pivot, which is the monthly close or the monthly open, previous month's close, current open. So, and price broke up through the opening range, and here you see evening star formation. You see it says ES, it means evening star. We can even turn on the full name so that it would be clear. Use abbreviation patterns false so that you could see the full names of the candle formations will be better. Maybe, I'm not sure. Yeah, it's better. So here you see the evening star, which signals the reversal, and we are at the reversal level. This pink line is the monthly R3 reversal level. So it was signaling the reversal, and you could go short with this evening star and target the opening range, which is 50 pips. Then you had more conformations, bearish conformations. You had here bearish engulfing and tweezer top. So when we got back to the close, here you see the candle patterns were shouting that the price might move lower. You see you had dark cloud, 3 crowds, dark cloud, tweezer top, falling 3, falling 3. So, and we of course closed it below the monthly close, previous month's close. So it was a signal to go short to where? To another reversal level, where we again had lots of bearish engulfings. You see 1, 2, 3 bearish engulfings, which were signaling to go short, that price is likely to break through the, I would even switch off these tweezer tops or tweezer bottoms. They are not so reliable patterns, I would say. Let's switch off tweezer tops and bottoms. False, tweezer top false, and tweezer bottom. We will switch off both of them. You can choose which patterns you like, and they will plot on your chart. Statistically, there are several patterns which are very reliable, and it is bearish engulfing, morning star, dark cloud, bullish engulfing, evening star. Those are kind of, you would say, reliable patterns. So we switch off tweezer tops and tweezer bottoms, though you may use them, but let's see. Yeah, then we avoid some contradictory signals because they are often false. Tweezer tops and bottoms, there are too many of them, and they're not as reliable. So here we had several bearish engulfings, and they were shouting to go short, and there was a breakout to where? To the L5 to S5 level, Camarillo S5, where price ended at S5, and then we again had 2 bullish patterns there, which were signaling to go long. Usually, as I told, price when it gets to S5, Camarillo S5, it goes back to the floor, to the blue line, and it did. You see, it took some time. Next month it got to the floor. So at the start of the month we had immediately 2 bullish patterns which were signaling to go long, price which were signaling to go long, and also about the bullish bias in the month. So that's what happened. You see, price was trending bullish. You see, and we had bullish patterns at the bottom of the opening range. 1, 2, 3, several. Morning star here. Look, morning star is so reliable, like 80% of cases. If you see a morning star, you can go long. And usually when you have a morning star, price pulls back like to the middle of the morning star, and that's optimal entry, where it forms like an umbrella pin bar next to the morning star, next candle formation. So when you have morning star, usually you can go several candles long. Usually it's safe to go long like several candles. That's what it did. Like here you have morning star, and about the same, like you can measure 2 morning stars, the size of this morning star, 2 morning stars up. That's what you can target just with 1 morning star. Then we had here close to the reversal level many bearish signs, and here we had bearish engulfing in reverse at the reversal level with bearish engulfing back to the close, back to the opening range. Next months we started at the opening, we had bearish engulfing evening star again at the reversal level. You see, reversal level evening star. Of course, it means to go short. You don't even need to use here sentiment data, but of course if you have sentiment data it's better, but you can go just with Camarilla, but I use all tools together, you know, it's better. So then we went back to the reversal level. Here we drop it to the reversal level where we had bullish engulfing, you see, at the reversal level, bullish engulfing. And we went back to another reversal level on the other side. And here we broke through the floor and had two bearish candles, bearish engulfing and evening star. Evening star is a bearish, very powerful bearish candle formations. Price pull it back to the middle of the evening star here, you see, like it is with morning star, the same thing, and then you could go short safely to 600 pips to target level S5. So this was such a massive monster. December before Christmas, no, Christmas holidays, low trading season. We had too many. It's just a range, you see. It was price was just didn't even make two reversal levels. Poor trade. And soon January started, lots of activity. You see, we started the months, we would drop it to the floor, monthly floor, January floor. And then we had several bullish patterns here, which were signaling to go long, and price went long. So we had a signal at the floor. You see that this floor will hold, and it did hold. Well, it actually was broken, but there was big pullback to the floor on the other side, to the ceiling roof on the other side, you see. And there we had two bearish engulfing patterns, signaling that the price will not break through this floor, and then we drop it through down to the L5, S5. We broke here the floor, and we broke here the floor again. And finally we made it there. We actually made it to the S6, and at S6 we had this bullish engulfing. This is S6 level. You see S5 and R5 levels, the target levels, breakout target levels. They are always double size, double distance. You see, you measure this distance between S3 to the floor or to the ceiling. Here you have 44 pips, 45 pips. And R5, S5 breakout targets will be always double distance of that, about 80 pips. It's a double size of this distance is R5. So some Camarilla pivot points calculation of R5, it can be up to you how to set it. It can be 1.5 or 2. Set it always to 2. It has to be double distance of this distance. You see, double distance of that is H5, R5 from the floor. So here we had bullish engulfing at 6, which was of course saying don't sell anymore. That's it, the reversal. So let's go then again. Here we had 3 cross pattern, dark cloud pattern, dark cloud cover, which was signaling to go short, that the ceiling, the monthly roof of February will hold. It did hold. But of course you have to use also interest rates, moving averages. It's good to have this well on. So next month we had bullish engulfings where at the floor, at the breakout level. After it broke the floor, here it reaches the target level, and we had those bullish engulfing patterns shouting that that's it, the move is over, and price is turning back where? Back to the floor. It's very classical behavior. Breakout through the floor, you reach H5 or L5 or R5, S5, depends how you call it. The target level, the breakout level, and there it returns to the floor. That's what it is. You see bullish engulfings, here you go long. And then at the next month, we reached the reversal level, but instead of having bearish patterns, well, we should have had here bullish, where we did have bullish engulfing here, which was signaling to go long about the reversal, but then this candle broke through, and then we broke the floor, as you see, and drop it to target level L5, S5. We reached there. Price didn't travel much beyond this, as you see. L5, F6 was not reached, so this is don't sell after this. After target level L5 or H5, don't sell. This is the way to price is overextended here. As I told, often it returns back to the floor. It didn't do so here. Sometimes it's not always perfect, but at least it helps. It gives you an idea of what is going to happen. Where you see, you often get many fake signals with those patterns, but very often they are correct. Like here, look at the L5 at the S5 level, the breakout target level. After the floor was broken, we had morning star, which was violated. This morning star was violated. Well, but if you would go long here, you still would manage to catch 90 pips. And then it went even further, then we had bullish engulfing. But still, those two patterns were shouting that price will go back to the floor, as it always does. It went 197 pips back to the floor. So here we had also bullish engulfing at the floor, bullish engulfings, which were shouting that prices, the floor will hold. So the floor held here with those two patterns. Here we had piercing pattern at the H5, L5 was signaling to go long. So that's how you use those candle patterns. Now current months, here we had bearish engulfing, which was signaling reversal back to the mean, back to the close, 112 pips. And this is 4-hour chart. Those are 4-hour patterns. Usually daily are much better, they say. Let's go to the daily. Yeah, you see here a daily. Perhaps it's better to use daily patterns with yearly Camarilla pivot points, because, well, you can see here also we had bullish engulfing, daily bullish engulfing at H5. I think if you use monthly Camarilla daily, it's not good because too few candles. It's better to use it's with yearly or higher Camarilla daily candles. So it's better to be at H4 for if you trade monthly Camarilla. So that's where we are. Here we had 3 soldiers and at the bullish pattern just above the monthly close, previous month's close, which was signaling to go long as well. Here we had bearish engulfing, you see, and when we hit the roof, here when we hit the monthly roof, April roof, we had dark cloud cover and bearish engulfing, which was signaling to go short, to that reversal will take place. And now, as I told, the bullish trend is to continue because of sentiment data that we saw. See, the reds were dominating above the blue, and they will keep dominating the rest of them. The question is only how big will be this pullback. I think this is over. Maybe might pull here to the pink line, to the R3, H3. We might pull back here. I doubt it will pull back all the way to the close. It's the very worst case. It might go here. Very worst case, another 190 pips. Because this move is quite skinny, but then, as I told, this skinny leg is within the price action to the left here. This was filled because it was extension in the new territory, so was filled, but I doubt that this will be filled. So we might go now higher. You know, so as you know, here somewhere here at the 111 we have median R1 yearly median pivot, which is a very important level. And from there, when we hit it, we might pull back 146 pips to L3 to H3, the reversal level. H3, R3, so confusing, those are names. Some call this H3, R3. Maybe I should stick just to R3 or S3, those levels. Anyway, so when we are at R3, after we hit the median R1, we are likely to shoot to this level, to the breakout target by the end of the month, or sometime early in May, before the next interest decision, which will be on the 4th of May, ESB interest decision. We should be around this level here. That's my guess. We should be there. Then after decision, it's not guaranteed that price will immediately go up. They will trend high if they raise the rates, and they will hike the rates, is what I heard, what they write. So it might also pull back after the decision, and only then you see they make some fake move down and then it goes up. Because you know, euro does not trend in a straight line, it always retraces, and here we can also draw the trend line, like the channel, you see. We can draw the channel here, which also very impressive channel. So it sends us very high. You see, it sends us here somewhere. You know, so we might see quite violent price action to the upside after they hike the decision. Sometime here in 4th of May, they will do another hike. But price will be pulling back, you know, it's not moving in straight lines, as I told. So that's what we would expect. Delete this, delete this. So this is I will remove the pivots, monthly pivots. We will just leave the daily patterns. Let's add some moving average, like 50 or 200 EMA, 50 EMA blue, exponential. Yeah, so now we have EMAs and monthly separators. You see here we had bullish engulfing, and here we had the morning star, which was signaling reversal. Morning star. Here we had at the top shooting star, dark cloud cover, piercing patterns, bullish engulfing. You see those patterns, they were really signaling the reversal. Bullish engulfing here at the end of this trend. Then we had here bearish patterns. So even on daily you can also detect tops and bottoms if you watch certain candle patterns. As you see here, we had the shooting star quite recently, and after that, after that shooting star, price dropped 120 pips. If your stop was like 30-40 pips, you're dead. It will take you out. So it's a kind of dangerous signal if you are long here to get that shooting star. Just liquidate position immediately, because it's a bad sign. It can be on daily. It's significant if you get such a pattern like bearish engulfing on daily. It would disturb me, of course. So here we had bearish engulfing. Morning star. Look how beautiful morning star is this. Beautiful morning star. This classical morning star here. And how nicely price turned up after this morning star. Usually price pulls back to the middle of the morning star and then it moves. Look, the move was 300 pips. This morning star generated the move of 300 pips to the upside. Was another morning star here, which was not a classic morning star. It was just kind of short of a morning star. This bullish engulfing generated the move of 51 pips. And then here we had the morning star. Look, and this pullback at 50 MA. We had this morning star. Look, beautiful morning star, which generated incredible move of 130 pips, and then price continued all the way 211 pips. So the candle patterns do work. Look here, a morning star, and it generated the move of 177 pips on daily. Another morning star at 50 MA, the move of 85 pips. So if a morning star and bullish engulfings, bearish engulfings, if they happen on daily, it is very, very important. Where evening star, look here, evening star at 50 MA, price pulled back to the middle of the evening star, and then we had a drop of 339 pips. Here a morning star, a rise of 194 pips after this morning star on daily, EURUSD daily. So Nison Candle Highlighter. I highly recommend this tool to you. And as you see, I switch off a great deal of patterns because you don't need all of them. You don't need all the patterns. Just keep those which are the most likely, like morning stars, engulfings, rising three crows, shooting star, like the most classic ones. Patterns, they do work on daily. As you see, they can be helpful. They can provide you a lot of information sometimes. Predictive power, price action with predictive candle patterns. I wish you all the best. Success in your trading.